Here's something for you to ponder. How many times should you try the same trade idea and get stopped out? Once, twice, 5 times? Let's discuss. Hey traders, warm welcome to you. All right, so you've probably asked yourself this question. How many times do I take the same, what's the right number? So in other words, take the trade, get stopped, take the trade, get stopped, take the trade. That's 3 times on the same trade idea. Now, how many is too many? Now I think we probably can all agree that like if you take 10 on the same trade, that's the wrong number. And maybe most of us would agree that just 1 is probably not right either. Maybe so, but maybe there's validity to taking a second bite of the cherry. So let's kind of look at a little visual example. Imagine, I think I always do this kind of one, don't I? Double bottom here, right? You take the first trade, bang, you're long here. Now it comes down, it stops you out, and it sits there, and it looks like it might go. And your thesis is that it's a long at lows. Okay, the first one might be in double bottom. Second one might be, it starts to break this little high here. Maybe you buy it here, and then it comes out and stops you. You get the idea. So it's not necessarily exactly the same trigger, but it's the same thesis. And the same regime, the same structure, and the same sort of constraints, i.e. window of time and idea, low to high trade. You know, we're not saying that, okay, if you get stopped out there and it goes up and starts to flag, can you take that? For me, that's a separate regime, a separate trade. I'd consider that completely separate. But if I'm still trying to buy this low, that for me is one idea. Now, let's consider, what about just one go at the trade? Well, you know, I wouldn't say that's a wrong answer. For me, that's not the way that I approach it. But let's look at the pros and cons of that. If you know you're only going to have one bite of the cherry, so to speak, you might be more considered with your entry. And you also might be more selective and a little bit less aggressive with your stop loss placement. You know, rather than just kind of having it tight and putting it right up against the structure of the trade, you might be like, hey, you know what? The structure of the trade plus some breathing room. Now, of course, obviously the whole trade structure has got to work for that, but you know, that might be something that helps you be a little bit more considered about when you take the trade and be a bit more mindful about, again, the stop loss position. But these things, sometimes things break. Talking about a trade that I took that literally stopped me at the low print. And it was a long trade, I read it right, I read it correctly, or the idea, the thesis, stopped me at the low print and then went on without me. Now, I then took funny enough, I then took a further trade, a flag at highs, which worked out well. Great, because my thesis was for a much higher move, but the structure had changed. But the question is like, how many times would you take that initial trade? How many times? So you've got to think, okay, why are you taking this trade? So, and why have you been proven wrong? There's so much to unpack in this. First thing is, okay, what caused you to get stopped in the first place? Was it a misread of the situation and the structure and the idea? I.e., were you buying here and actually it was a downtrend that was just in its kind of flag phase? You don't know that yet unless it's, okay, I think we're all agreed, right? If it goes heavily lower, then it's a different trade, right? You might want to buy an exhaustion, but that's a different idea. But if you're kind of around the same area and you're buying it, that's what we're talking about here. So you might be like, hey, I've read it wrong, or is my stop loss just a bit too tight? Now, if it's the latter, and it's hard to be objective here, we don't know the answer sometimes, but if it's just a very, I say very obvious, but more likely to be the latter, i.e. my stop was a little bit too aggressive, I've been pinged out, the structure still looks sound, then I think that's the time you can have another go. You know, for me, if I have that and I've been like, you know what, it's a bit aggressive on the stop mark, you're trying to be too clever there. It still looks sound enough. Let's go in again. Let's maybe reduce the size, the clip size, have the stop loss a little bit wider and try and maybe peel on more to the position as we go in the favor and try and build the position back up, do it that way. You know, it doesn't have to be a binary on or off. And so, but then if I look at it and go, you know what, you were stopped out there. Yes, maybe the price has come back up, but it's not that clean. Like it still could go either way here. And actually, the more time that goes on, the less likely this trade's going to be working. Because if we're thinking, okay, it's a little flush low and pop up and you go long, and it sits and stagnates and holds at lows. Now, the longer it holds at lows, the less likely that is the rubber band stretching and going to kind of contract and you're looking for that pop back up. And so naturally, just the more time that goes by, the more likely you are to say, no, I don't think so. But then more importantly, so we've got the operational side of it. Is it just the structure structure of the trade's failed, which you probably, if you can identify that quicker, you're not going to take another go. If it's just a tight and aggressive stop and a mismanaged entry, then maybe you will take another go. Okay, so that's the operational side of it. But more important, and that's important, but equally as important, let's say, not say more important, equally as important is how it affects your mind. Now, if you're trading, stopped out, trading, stopped out, trading, stopped out, you've taken 3R units worth of hit there. That's a lot on one trade. That's like taking a triple size trade with one stop. When you think of it like that, you're like, well, it is. It's like you taking 3 times the size and having the same stop on that one deal. And you probably won't want to do that, but some of us are happy to take multiple tries at the trade because it's almost like the frustration gets the better of us. FOMO really likes to live in these little areas when the market's sitting there, you get stopped. I don't want to miss this now, and then it misses it, and then it starts to go, and you buy here and pull. You've got to be very careful. At some point, you've got to say, listen, you know, for whatever reason, whether I can't get the trade idea right, whether I can't get the structure right, whether I can't get the timing right, whether the market's just, you know, doing crazy things, I'm not aligned with it, almost doesn't matter. I can't get on the trade. And at some point, you have to go, right, I might be quitting this trade. It doesn't mean I'm quitting the whole thing. It just means I'm waiting for the next regime. Fine, done. You're not in line with what I'm trying to do. You're stopping me out, or I can't get a feel for it. I'm done. Next regime. Let's see what. Come back in an hour. Come back tomorrow. Whatever it may be. Because what you don't want to do is be like punting away, bang, 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 taking several bites of it. Because not only does that potentially trigger you on tilt, which you absolutely don't want, right? Because that's just, doesn't matter how good you're a trader. You suddenly start trading on tilt, it's game over, right? So you don't want that, but you also don't want to be, you know, allocating all that capital to one idea, because that's what you're doing. You're just breaking it up into chunks. And I know at some point it's hard because, like, well, and also the more trades you take, the harder it is to quit. Whereas if you say, okay, I'm going to take 2 goes, and then I'm done, it's harder. When you get past 3 or even more than that, you're like, okay, I've done all this now. I can't not take it now because I've been trying to take it, and you get in this weird mindset. So I think they're being very specific and saying, hey, I'm going to do 1, I'm going to do 2, or in my opinion, 3 max, depending on the deal and how it's structured and all this type of stuff. But, you know, really, if you haven't got it and you haven't kind of got some entry and it's working, you know, decently after your second go, you've got to think, hey, am I really flogging a dead horse here? I'm taking 3 times the risk that I really wanted to take initially. It's turned into something that even if I get right, may not be that profitable. You know, is it becoming a bit of a nemesis for me, a bit of an enemy? Am I kind of is it getting to my head? And just considering that and work out where that point is for you. And so that might be dynamic. You might be like, hey, listen, some days I might just take 1 go. Some days I might prepare to take 3. You know, but identify those and put those in your plan. What defines when you take 3? What defines when you take 1? What defines when you take 2? But having that as an additional rule, I think, is super important. And, you know, something doesn't always come up, but it's something that can come up and can creep up on you and then kind of cause you to trade in a way that you don't really want to trade. So I think the answer to that is, for me, is 2 on average. But, you know, work out for yourself, have a think. It's worth spending a little bit of time writing in your plan exactly how many bites of the cherry or how many attempts at the same trade idea you'll take before you move on to the next phase of the market and look for an additional trade. Because sometimes it's going, you know what? So what? If it happens, it happens. I can't get one out. You almost get fed up. Throw the towel on that one. Go away, have a walk, come back refreshed, and you're ready. And sometimes you hit a beautiful one out of the park, and you forget you weren't even involved in that. What you don't want to do is get caught up in that so much that it becomes, oh, like, man, you remember that trade got caught up in last week, and it's like in your mind because you lost so much money on it. Not a good idea. All right, take care. Keep your risk managed. I shall see you in the next one. Bye bye.